Stocks just tanked, and everyone is asking why. The warnings are piling up as Goldman Sachs, Morgan Stanley, and even Michael Burry are all calling for a major correction. Bitcoin broke below $100,000, office defaults are surging past 2008 levels, and fear is back in the market.
We saw an insane gap down with the SPY this morning. We can see that the SPY gap down and pretty much touched the 674 support and actually held it as support all throughout the trading day today. Now, we did get a pop-up early in the morning to retest resistance, but ultimately the SPY closed down in the red. We can see in the bottom right-hand corner of the screen, the SPY closed down 1.19%. Looking at the heat map today, we can tell big tech definitely ran the show and is the ultimate reason as of why the market gapped down. Everybody's looking at Palantir. They reported earnings yesterday. Everybody's talking about how overvalued some of these stocks are, and Palantir is the pinnacle of overvalued stocks, as we've been showing over the past few months. Nonetheless, though, they've continued to be resilient in 2025, at least up until this point. Now, everyone's wondering, why is this happening right now? Mike, like you said, some of the biggest Wall Street CEOs are actually saying that they're expecting a correction of more than 10% in the next 12 to 24 months. Morgan Stanley CEO Ted Pick and Goldman Sachs CEO David Solomon both told a Hong Kong financial summit that they see the possibility of a significant sell-off in the next few months. And of course, if we do see a significant sell-off, that has huge implications for investors.
Oh yeah, and of course, pullbacks are normal, healthy, and expected to a certain extent. But over the past couple of months, we have seen a lot of craziness in the markets, so much so that even the famous short seller, Michael Burry from The Big Short, if any of you guys saw that movie, had a lot to say recently as he revealed some NVIDIA and Palantir put positions. So I thought this was pretty interesting. Tom, what's going on here?
It's pretty insane. So now keep in mind, they're talking about notional value here. And I want to explain something before we really get into this too deep. So whenever they have filings, and specifically the 13F filing that people look at, especially for Michael Burry's positions in this case, we can see NVIDIA and Palantir are on this list. Now there is a column with the value to the nearest dollar amount. Now a lot of people were actually putting out a lot of false information today, saying that Michael Burry was taking a $1 billion plus put position against these two companies. Now, nonetheless, this is notional value. It's still a huge position that Michael Burry is having here, but just keep in mind, it's notional value that we're talking about. And also, if these trades are tied to any spreads, we're not actually able to see the short legs of those spreads because only longs are required to be filed on 13Fs. But either way, it was a big headline this morning, and a lot of retail traders were looking into this situation with Michael Burry and the NVIDIA and Palantir put positions. And Mike, he has a lot of reasons as of why this could be troubling here. We've talked a lot about why some of these stocks have fallen recently, like Meta, where we saw capital expenditures growth, continuing to go, and then they're raising targets as well. Now we can see on this chart that if we go back and we look at the tech bubble from 1999 to 2000, specifically in the tech sector, we saw CapEx growth at similar rates as we're seeing right now.
Yeah, so this AI bubble has been insane. Of course, there's a lot of good that's going to come from it, but there's also a point where, valuations just get a little bit too expensive. We won't know the exact strike price and expiration of the put options that Michael Burry bought, so that's just something we'll have to dissect over time, but it is interesting and worth keeping in mind. And Tom, the Palantir CEO, Alex Karp, was not happy with this news.
He was not. Alex Karp was blasting Michael Burry for this, actually calling him batshit crazy. And it was kind of funny. He comes out here, he goes, he's literally shorting the two companies that are the ones that are making all the money right now. And he goes, that's super weird. I mean, it was actually such a big report that Alex Karp was even out here answering questions on CNBC about it. I definitely got a kick out of this one. And I will say, looking at Palantir's stock today, Mike, it sold off in a pretty pretty nasty way, and there is a pretty key support in the short term around 185. If we start to see a flush below that tomorrow, I think we might be looking at more of a continuation here.
Yeah, it's definitely one to keep close on watch, but even as we look at the market as a whole right now, we held support today, but that price action was weak. So Tom, as we look at the market for tomorrow, what are the top levels to keep on watch?
I highlighted a really nice range here for us to watch for tomorrow. Now, there's a couple key levels. 678.50 was a previous resistance that we're still going to be watching. There was a middle of the day rejection off of that level, but more importantly, the top end of this range around 680 is going to be the main area of resistance that I watch for. There are a couple minor ones like 678.50 and 677, like it's highlighted on the chart here, but nonetheless, I like the range between 680 and then the low from today around 674. That'll be a critical range to watch for the next few trading days. Now, if we start to really flush under 674, we actually have to go back quite a while to find some of the next larger support ranges coming up. And one of the biggest ones is going to be 678 and then also 665 to 664. That $1 range around 664 to 665 will be critical in my book, considering how much the market started to bounce there on October 22nd. But that's what I'll be looking for over the next couple trading days with the SPY, and we did actually break below that critical support that we talked about where SPY triple bottomed, and it was right around that 680 point where it rejected today. I know a lot of traders ended up shorting the SPY at that point.
Yeah, let's keep an especially close level at that lower support. That is like the make or break point for the market right now, at least in my opinion. Bulls really don't want to see this let go, but if it does break, it definitely can be a big warning sign in the short term. But Tom, we also had some pretty wild data today showing how 2025 truly is a year unlike any other. We can see that the AAII Bulls minus Bears survey data is at minus 11% in 2025. There have only been 3 other times this has ever been below 10%, and each one of those times happened in a bear market. So that is something worth keeping in mind. It's not the end of the world, but it is another thing that makes you just, sit and think for a second.
It definitely does, right? Whenever you start to see data like this come out and just suggest that, that there might be a bit more bearish activity out there, it's definitely something that you're going to want to keep in the back of your mind. And like you said, it definitely shows that this has happened a lot in bearish markets. So I will be watching this data very closely. Maybe we'll see it change, but I don't know. It's looking pretty brutal at the moment, Mike. But with some other data coming out, there's so many important stocks out there moving the stock market right now. And of course, the big tech stocks are definitely in focus. Nvidia, Apple, Microsoft, Amazon. Even whenever we talk about Palantir, they're not a top 10 in the S&P 500, but nonetheless, these tech stocks have big implications for the overall market. So keep them on the radar for the next few trading days. And then also, Mike, Bitcoin fell below $100,000 today for the first time since June. That's a pretty brutal thing to hear. It's unfortunate to see Bitcoin pulling back so hard. The SPY is pulling back, but not necessarily with this much velocity.
Yeah, Bitcoin's actually in a bear market now, Tom. It's down 20% from highs, and it goes to show that, this recent turn of bearishness isn't something that just, magically flipped on overnight. Like, depending on where you look, we have been seeing some real selling pressure, and it goes to show, like you just pointed out, that, you really have to focus, especially when you're looking at the S&P 500, on those top few companies. Nvidia, Apple, Microsoft, Amazon, these types of stocks have such a heavy skewed influence on the market where, it shouldn't be a shock that when we see these stocks fall, it increases the velocity of the market's drop, just like we saw today. So yeah, let's certainly lock on to these big tech stocks because they really are running the show. But Tom, I also think that there's a certain element of just bad news finally catching up to stock prices. Today is day 35 of the government shutdown, tying it for the longest ever. And yeah, we are not looking good on this front.
Definitely not. Kalshi's still pricing in 43.5 days right now for how long that the government shutdown will last. That's pretty brutal if it does keep going that long. And as we know, the longer that it goes, the more implications that it has on the economy. And, there's just been, I would say, a plethora of negative data coming out about the market and just about the economy in general recently. One of them today is that the delinquency rate on commercial mortgage-backed securities for offices surged in October to a record 11.8%. We can see this actually destroys the 2008 financial crisis, the oil bust, and even the recession that ensued following the 2000 dot-com bubble. But this is pretty insane data here, Mike. What is going on, and why is this something that really matters for the overall market here?
Yeah, so basically a bunch of office loans were made when rates were really low a few years ago. And now that these loans are starting to come due to certain extents, refinancing costs are much higher and property values have tanked because, remote work took off. So basically the owners can't really afford the new payments or find any good buyers. So we're seeing, more of them default, which is a problem. So this is more of like a hidden thing happening in the market right now. It's not like it's having like huge implications on the stock market now, but I think it is a reflection of some of like the hidden weakness in the economy that we don't always see in each day's headlines.
Exactly. It's not something that is going to really impact a lot of consumers at the very moment, but let's say that we start seeing some banks, fail, and we start hearing a lot of these loans starting to fail as well. It could start to obviously impact the market quite a bit the more that we hear about it. Jamie Dimon was just talking the other day that if there's one cockroach out there, there's probably a lot more. I feel like that there's going to be a lot of data like this starting to pop up over the next few weeks and few months in general. But Mike, we still are also dealing with a lot on the economic lineup this week. Now, it's not like we're necessarily dealing with a ton on the true economic lineup, like the ISM Services PMI, Manufacturing PMI. Of course, we have those going on tomorrow at 10 a.m. Eastern. Watch out for the Services PMI, Michigan Consumer Sentiment on Friday. But there's actually a hidden gem this week where there's actually a tariff decision with the Supreme Court tomorrow. So be ready tomorrow. The Supreme Court will be voting on this. Now, there is a majority. Republicans hold a majority of 6-3 in the Supreme Court at the moment. Trump appointed a few of these justices as well. So it's going to be a pretty big decision. If they end up deciding that the tariffs that Trump has been enacting are in fact illegal or not allowed, then obviously there's a lot of other routes that they could go. Bessent was out there actually saying today that there were a few other routes. I saw some people quote different sections, like Section 122 of the Trade Act of 1974, Section 232 of the Trade Expansion Act of 1962, Section 301 of the Trade Act of 1974, as some possible other options if they aren't able to do the exact tariffs that the Supreme Court would block tomorrow. Again, we could get really deep into these tariffs, but I think at the end of the day, just be ready. I don't think that they're going to block it, but if they do, I think the market could get shaken up quite a bit.
Exactly. Like basically if the Supreme Court limits Trump significantly, then that can shake up a lot of the craziness that we have been seeing over these past few months related to tariffs. And that could just, throw a wrench into all of this. We'll have to see what ends up happening. I'm not necessarily expecting anything too crazy out of it. But again, as always, we want to share this information with you ahead of time so you can be aware of it and look out for it. I have not seen a publicly confirmed specific time for tomorrow's session, so just keep it on the radar. But Tom, as we know, we also have a handful of pretty exciting earnings lined up this week as well. So what's on the radar?
Yeah, tomorrow will actually be a really fun day for earnings in my eyes. Novo will be reporting in the morning, one of the companies focusing on a lot of the weight loss drugs recently, so that one will be interesting. And McDonald's will be reporting. I know that they've had their Monopoly game, and I've been watching that one closely. Cameco has had a lot of price action recently as well. In after hours, Robinhood will be a very popular report, so be ready for that. Qualcomm and ARM will be big for the chip and the tech sector as well. And then as we go into the end of the week, earnings do slow down a little bit, but I'm definitely watching DraftKings and SMR very closely on Thursday and after hours as well.
And Tom, it doesn't help that today AMD reported earnings after close, and this report is not looking too good. So this just adds even more selling pressure in the short term. SPY is holding up fine for now, but let's keep a close eye on it because as we saw with Palantir yesterday, they started off pretty good, and then as the night went on, it got worse and worse and worse. So let's definitely keep a close eye on AMD. And besides that, let's get right into the fun stuff, which are some setups and predictions. And a stock that is definitely on my radar is SMH, and it is to the downside. So this is actually somewhat connected to AMD. Essentially, SMH is an ETF that follows semiconductor stocks in general. As we've seen over the past couple of days, we are seeing a lot of investors start to freak out because Palantir crushed their earnings, but that wasn't enough to actually get the stock price moving to the upside. Investors are starting to get more concerned about valuation. Chip stocks are one of the leading areas of the market from the AI boom. And as we can see just by looking at SMH, or quite frankly, like any big chip stock over these past couple of years, they have had quite the run. I think this area of the market is especially vulnerable in this environment, and SMH is definitely on my bearish radar. This does not mean SMH has to fall tomorrow. I wouldn't be surprised if it did, but this is more so a play over the next like 1 to 2 weeks.
Yeah, I definitely like it to the downside as well. You know, on any given day, you could see some consolidation or random price action, but I feel going forward here, there's been a bit of a short-term sentiment change whenever we talk about the overall market. There's been a lot of people that have been getting a lot more bearish on these chip stocks, and with my first play, I'm actually looking at NVIDIA to the downside here. Today, NVIDIA actually broke back below a major psychological level of $200. I thought that was a pretty bad move. And one thing that ended up happening is it didn't just break under there and then chop around. It actually rejected at the very end of the day one more time, and then now it's falling down in after hours with AMD's report. It had a pretty bad day in general, though, following down Palantir, closing down almost 4%. Anyways, so I'll be watching this one to the downside. There are some pretty big buy walls here coming up on the Bookmap, and we can see today there was a massive buy wall at 200, and once that officially broke, now I'll be watching for the next big buy wall to come into play around 195. So if we can get a break of like 198 tomorrow, I will be watching for a push closer to 195. Again, in after hours tonight, it's already down below that 198 point, so make it stay below there heading into tomorrow. There is another buy wall at 190 where there's around 243,000 shares stacked up. I figured I would mention these because I could see some consolidation or possible bounces close to those. These are some big levels though, and I will say the volatility with these chip stocks is starting to pick up quite a bit. Just don't get too married to one direction, of course. If we do wake up tomorrow and let's say AMD has a magical reversal, but that doesn't mean that we need to force a trade to the downside.
Exactly. Always have to stay adaptable. Another stock that is close on watch is UVXY, and it is to the upside. This is a good stock that tends to move higher when the market is in panic mode. As we can see when we zoom out with this one, when we saw that sell-off just a few weeks ago on October 10th, UVXY basically went from like $10 all the way up to around like $12.50 just on that one day. And then over the course of like the next couple of days, it went all the way up to like $14. So that's like, just about like a 40% move. And when you zoom out to bigger market pullbacks, the moves get even bigger. Of course, the market isn't in free fall yet, but if we do see more selling pressure take place, UVXY can be a good area of the market to look at to potentially protect in environments like this one.
Yeah, I definitely like it. Going back to some of these bigger sell-offs that we've seen even this year, like in 2025, during the April sell-off, and I'm not even going to nitpick the very bottom. Let's just say you picked on this second little dip there. It ended up popping up 173%, and if we do see a short-term sell-off, we could see some pretty good volatility, so I will be watching it. One stock that I'm actually watching back to the downside is General Motors. Right now, if we do see the economy start to weaken and a lot of negative headlines come out, I would not be surprised if some of the automakers took a short-term hit. GM has been one of the stocks doing very well here ever since the April lows, recovering up in a pretty awesome way. And recently on earnings, they had a major gap up as well. Now, in the ultra short term, I am looking for a straight-up continuation off of today's selling pressure. For tomorrow, if we're able to fall below 66.70, I will be watching for another red day to post similar to today. I'm not saying it's going to be the craziest move ever, but even a move of like 2% can play out pretty well on GM's options. Whenever we look at the daily, again, it's starting to turn over. We've had 2 red days in a row so far, and we can see that whenever GM does start to turn over, it can continue down for a few days to even a couple of weeks. So I will be watching for more of a continuation here, especially considering how much it gapped up just a couple weeks ago.
Definitely. All right, sounds great there. And let's jump right into today's momentum plays. And with the first one, we have Chewy, ticker symbol CHWY, to the upside.
Chewy had a nice jump today, up 2.64%. If they can break out above $34 in their right at their after hours high, then watch them to the upside.
All right, with the next one, we have American Airlines, ticker symbol AAL, to the downside.
Yeah, American, pretty rough day, down 5% here. If they break under $12.50, then watch them down as well.
And then with the last one, we have Bitmine, ticker symbol BMNR, also to the downside.
Yeah, we called this one out yesterday, and it really flushed. And in after hours here, my gosh, it's going even more. Make it break below $38 for tomorrow. If it breaks it in pre-market, then watch for $37.50.
All right, so we have these 3 stocks on the radar for potential continuations if and only if they break through the levels listed. These stocks are volatile, so you have to protect yourself. Whether you trade one of these 3 stocks or anything else, focus on making smart, long-term oriented trading decisions. And as always, if you need help with that, check out the Key Lessons channel in the StockedUp Discord. It is completely free. And then, Tom, let's jump right into today's $1.4 million big money trade. This one I thought was very interesting, and we are looking at ticker symbol LRCX. Today, the trader here bought the 158 strike put options that expire on January 16th of 2026. Lam Research is an American supplier of wafer fabrication equipment and related services to the semiconductor industry. As we saw today, investors are finally waking up to how aggressively valued some of these AI companies are, which is responsible for a lot of the selling pressure that we saw today. The AI area of the market is getting hit the hardest, so it makes sense why an equipment supplier to chip makers could fall lower. I really like how these put options are in the money. They have a fair amount of time to them with around like 73 days left to expiration, which is a good amount of time, but it's not like you have to wait 2 years. And it's a decent sized trade as well. This is one that's very interesting in my opinion.
Yeah, almost $1.5 million, a decent size here. And the 158 strike being in the money at this point is pretty advantageous. You know, we just started bouncing below 160 once again. And if we start to see that 158 strike get in the money by a lot more here, which, you know, judging by how much LRCX has risen off of those April lows, I would not be surprised to see a much larger pullback come into play. You know, firstly, there's a couple big supports coming up on the chart. I really like this 140 to 130 range. I would not be surprised to see LRCX trade within that. And honestly, you know, just based off of normal price action and just charting in general, I wouldn't be surprised if they actually came down to test 100. Now, that would be a pretty big pullback from their current price of 155. But again, some of these stocks have risen so much that, you know, a slight pullback down to some larger areas of support would not be surprising. There is a previous support close to 110 as well. So I guess we could look at that as more of a $10 range there between 100 and 110. But nonetheless, those are a few ranges that if we do start to see a really large, like market-wide pullback, I could see LRCX pulling back down into those ranges there. Nonetheless, though, very large play, and I'm glad it has time and is in the money. That's the main thing there for safety in my book.
Yeah, so either way, let's keep it close on watch. Should be interesting, but if you guys are new to the channel, welcome, and definitely consider obliterating that subscribe button. For every single trading day, we do hours of research to cover the most important news, information, SPY levels, upcoming earnings, events, chart setups, big money plays, historical statistics, and basically everything you need to know about the stock market every single day. If you subscribe, you'll get our videos recommended to you more often, so definitely consider doing that. And also, let's give a giant shout out to today's member of the day, G-Dog, in the Stocked Up Discord, who had some nice profits today on multiple different tickers. And when we scroll up in the profits channel, we can see he had some great gains on an account basis overall as well. So huge shout out to you. Keep up the great work going forward. And if you guys are into short-term trading, definitely check out Bookmap. We cover it in basically every single video. Tom showcased it today with NVIDIA to show exactly where key buyers and sellers are stacked up. This is one of the many things you can do with Bookmap, but this is a great way to see like real support and resistance levels and points at which, you know, the stock might turn at, and that can offer good breakout and breakdown opportunities. Stocked Up viewers do save quite a bit. If you use the link down below, a like hidden special offers tab will appear, and you can save quite a bit that way. So definitely check it out. It'll be in the description and the comments down below. But the market is heating up. We have a lot on the schedule this week, and it should be a fun week. Thank you all so much for watching, and let's crush it in the market tomorrow.